predetermined what's going on in this diamond life. So our trade has worked out. I predicted a trade on GU, and I want to go ahead and draw what I predicted. So uh, I told people what would happen, and if they didn't buy at the area I told them, then shame on them. So basically, let me enlarge the whole screen. All right, so this is what I said would happen. Okay, so let me go ahead and get the drawings going. So on GU, let me, I know I'm gonna have to lighten this up, so let me make it all the way white. All right, so, sorry for my, okay, so on GU, what happened was we had a huge bullish breaker down here. Okay, so we had a huge bullish breaker down here, and then price went up, and we had another bullish breaker, but it was smaller. Okay, and so price went all the way up, and our targets were up here. We had a one standard deviation that wanted to get hit. Okay, the first target was the orange line, which is here. And above the orange line, we had one standard deviation, which was our overall target. Okay, this is one standard deviation, and this is the orange line that we and my team, we came up with an orange line, which was the target. Okay. Okay, this is the orange line. Let me try to change the colors so it can make more sense. Hold on. So this is the orange line, which is our target, and then our standard deviation is a yellow line. Okay. So basically, I'm about to show you what I said price would do, and what I instructed people on the team, the Looper Signals group, to do. And if the people didn't do it, then shame on them. Okay. Now, the one standard deviation was here. Oh man, I probably should have. Just let me delete all of this right here. Sorry. Okay, so the one standard deviation line is the yellow line, and the orange line was our initial target. Okay. So what happened was price came up here and it took it. It took the target. Then people on the team was like, okay, well, what do we do right now? And what I told them what would happen, if you go back and watch the video, is exactly what I said would happen here. I said that price would. I said because we had a. Let me do this. Let me draw. We had a bullish breaker down here. This is a learning lesson as well about how these breakers really work. So we had a bullish breaker down here. Okay. And then we had another bullish breaker up here. Okay. So the learning lesson is that price is actually going to respect the bigger structure here. This is the bigger structure. This is a bullish breaker, but if you watch the video, it just sometimes all the training and all the videos and stuff I watched and all the sacrifice I did, sometimes it just come out of me, and sometimes I look back at the video like, damn, I said that, but I guess all the training and all the work comes out in the video sometimes. But I said that price would do this here. I said that price would come up here. I said that it would come down here, hit this breaker. It would be an immediate reaction because it's a fresh bullish breaker. And then I said, I said price could go higher, but I said we had equal lows down here. Also, we had equal lows down here, and we had equal lows inside of this breaker, which I'm surprised price did not hit. I don't think it hit it, but we have to go to the chart and see. So I said price would come down here, it would hit this bullish breaker, and then it would come down here. And then I said it would come up here and take out our target, which is a standard deviation. If you go back and watch the video, I can't go back and change the video, right? I said that price could come down here, but if you go back and watch the video, I said that I don't see price going past this bullish breaker. Okay, even though we had equal lows down here and equal lows down here, I said that I don't see price going past this bullish breaker, and it's most likely gonna come up here and take out our target. Okay, go back and watch the video if you don't believe me, because that's predicting price before it happens. Okay, which is what our teacher teaches us to do. Okay, so let me go ahead and change this color, and then we'll go to the actual chart. I just want to draw this out. So the blue is the price prediction. These lines down here, the red lines is the equal lows. Okay, so the market wants to take out the equal lows, the algorithm. Okay, so we have equal lows down here, and we have equal lows right here. Okay, and so price did exactly this, which is what I predicted. Now let's go to the chart itself. Now, I'll be honest with you. I took off everything at 1 standard deviation. Now, I should have had a run-on. This was poor position management on my part. To be honest with you, when price was down here, I should have bought, but I thought it was going lower for some weird reason. And so I got in late. I got in when price was around here. Now, I actually got in where price was in pushing up to this bullish breaker, because the way ICT teaches this, he teaches you should, if you actually know what you're doing and you know the bias, you should actually get in when price is actually going up through this breaker. Before, I thought I should wait until price comes down to the breaker and then buy, and you can do that. But ICT says if you really understand what's going on, you should buy right here where price is going up in the breaker. Does that make sense? So let me go to the actual chart itself. Now, price could still be pushing up, and I'm be salty if it continues to push up. But my targets initially was the orange line and the yellow line, which is 1 standard deviation. So I really can't trip because I got out at my target. Now, I should have had a runner on. I should have got in down here, put in 3 positions, took out one right here because price was a little choppy, and then took out one here and just left a runner on. But, you know, I have to do better next time. So let's go to see what price is right now. It's probably still pushing. It's going to make me mad that I didn't leave a runner on, but, whatever. God damn, it's pushing like crazy. Okay, so here's the 1 standard deviation line right here. This was a bullish breaker as well. It's another reason why I got out. So I guess I can't trip too much, but I understand that this is a fresh bullish breaker on a daily chart. So if you understand how the breakers work, when price hit it, it's going to reverse pretty hard. So that's another reason why I got out at this 1 standard deviation here. Okay, I had an alert set up. So let's go back and look at price to match up to that. Let's see if price matches up to what I just drew. Okay. Now remember, go back and rewind the video. I said that we had a bullish breaker down here. Now look at the structure here. Price is going to respect the bigger structure bullish breaker because we had one right here as well, right? Higher high. This low was taken out, so the highest up close candle becomes the breaker, right? So, like I told you, and if you go back and watch the pictorial, the orange line was hit, which was right here. So that was a target. So people in the team was like, "Well, what do we do now, coach?" I'm like, "Well, I would take something off here for sure because that's why you have to put in multiple positions." And I told him, I said, price will hit this bullish breaker, then it would reject. But I said I don't see it going to take out our target here up here, which is this 1 standard deviation, because we have another bullish breaker down here, which is a lower structure. So what happened was price came down here reversed. Now, if you understand how the structure works, check this out. Okay, so if you see here, this is a bullish breaker, right? Now look at the candles. Price closed inside of this bullish breaker on the 15-minute, right? So this is a sign. If you want to write this down, you should definitely replay this part right here. Look at this. This is very important. Since the candle closed inside this bullish breaker zone, it went higher to take out a high. So you could make money off this move and just get in. Price is going to reject off a fresh bullish breaker. Please believe that. This is a fresh bullish breaker, never been hit going down. But since the candle closed inside of it on the 15-minute chart, this told you right here that it's going to take out a previous high. It did a rejection block up here, but it's going lower. Okay, let me show you how that's true, because we have another bullish breaker down here, right? Highest up close candle on the 15-minute chart before the low was taken out, which is here. Now look at this. No candle closed inside of this bullish breaker. I'm going to repeat that. No candle closed inside of this bullish breaker. Do you understand that? So this is game time that it was going higher, but I still didn't trust it. Look at this dumb shit I wrote right here. Well, ICT said don't beat yourself that much. I said I want to take a buy, but thinking that it will do the same thing it did before, which is equal lows. So that's what I was thinking versus actually looking at the structure, because we had equal lows right here. The algorithm definitely wants to take out these lows. This is too clean right here. So what I was thinking was, instead of looking at the structure, I was looking at patterns, because we had equal lows right here. So I was like, okay, well, price is probably going to do the same thing. It's going to reverse temporarily and then come down here and take out these equal lows. But not understanding the structure, ICT did a video on this. He said if you see candles close inside of the bullish breaker wick high, then it's going to go up temporarily and go down. That's what I'm saying. That's why this stuff takes time, because just because ICT tell you you're going to do it, or whoever you learn from tell you that it's going to happen, you have to see it. You have to see it work real time in the charts yourself. Okay. So no candle closed inside this bullish breaker. So that was game time. It was going higher. So I actually got in right here. Okay. So I can't beat myself up too bad. I did get in here. I actually thought about taking a loss. So this is important too, to write down your thoughts, because it'll show you how it's a part of you that wants you to lose. As weird as that sounds. And then it's a party that wants you to win. So you have to see like which one is talking to you when you're doing these trades. Okay. So it's good to record your thoughts in these moments. So right here, I sold my longs. Oh yeah, I actually sold my longs right here, which is weird. I sold my longs right here. And yeah, I sold my longs right here because I was looking at the indicator I was using to call machine learning. And usually it works, so that was foolish, but I thought I should have just known right here when I saw this game time is going higher. But I know next time. So so I sold my longs here, which I could have made double the money I actually made. And but it's cool. So it says get out. Let's see, get out now. Get out of your longs now. It's not going to the higher standard deviation. I'm sorry. The others are struggling to do it as well. So it's just a break and retest to go lower. So that's what I thought this was. I thought this was a break and retest to go lower, but see the candles. This told me everything. Candle closed inside of this bullish breaker. You understand that? Okay. And price never hit this 4-hour bullish breaker high. So this was game time. It was higher. It was especially when it took out this high right here. And so that's another reason why I got out, because this high didn't. Well, I should have just waited till this high was taken. Okay. It actually was taken here. Wait, so I actually got back in. So I started reanalyzing the structure. I started drawing fibs, and I started to see like how I started looking at fibs, saying, okay, well, how far down could it come before it goes higher? Okay. So looking at structure here, so I put the Fibonacci on the bodies on the 4-hour fib, and I thought price would actually come down lower, because if you understand Fibonacci, theology, the way it works is it has to retrace down past a certain point to go higher. So I was like, okay, if it don't go anywhere than here, then it's going to reverse at negative 27. Negative 27 lines up a little bit before the bullish breaker. Okay, so this kind of lined up a little bit right here, but I actually thought it was going lower. But I was like, you know what? Even if it goes lower, I have enough in my account to weather that retracement. So it's no need to sell my longs, because I actually got back in. I think I got back in right here. I should have recorded where I got back in at, but I was like, even if price goes lower, I have enough in my account to weather that retracement. And so I just stopped. I just stopped worrying about it, and then I got back in long right here. So I got in long again here, seeing that I was wrong. It wasn't a break and retest, and then I got back in long right here. So I saw price going higher. I just got out soon as my my signal said that this level right here was hit, I went ahead and got out because this is a fresh bullish breaker on a daily chart, which is a higher time frame. So I mean, and what level is this here? This is okay, and I also have an area on the chart right here where it says EU reversed here on the daily chart. So EU and G, see, look how crazy this is. EU and GU moved exactly the same, right? So I went on the weekly chart and I found the order block that EU reversed that, and so I found it, and then I found the same order block on GU, and I put right here EU reversed on the daily chart here. So I found the daily order block where EU reversed hard at, and now it looked like it's the same thing is happening with GU. So I'm not mad that I got out here. I'm actually proud of myself that I got out right here, because if I still would have held, it looked like price is starting to reverse down hard. So I actually don't know what's going on now. I have to look at all four pairs, the sister trading. I have to look at all four pairs to see what the next move is. Okay. Um, so all the four pairs is here. Okay. Now I'm about to introduce something right now. Now, what I'm doing with the team that I haven't told my team yet is that these are the four that we're trading right now, right? GU, let me take these off. Okay, so these are the four we're trading right now, GU, EU. We did our own analysis and we seen that these four is the strongest four that move. These actually move more similar to GU than GJ and EJ, which is what most people do. Okay, so what I've been doing is I actually did the exact opposite. I said, okay, well, what moves the exact opposite of GU? And then I came up with these pairs down here. This is a combination of looking up GU and EU. So I have these pairs that move the exact opposite to GU and EU. So what me and my team is going to do for next month, December, we're going to hedge. We're going to hedge all our trades. Meaning, when we actually see the setup next month for GU and EU, what we're going to do is uh, we're also going to trade these pairs that move the exact opposite. So if we get in for a buy, if we see that GU has to go extra 500 pips, for example, up, then we're gonna if that's a long that we're gonna get into, then we're gonna go short CAD, JPY, or USD Chef. Okay, we're gonna find a setup that has to go lower. So what I'm trying to tell you is that we're gonna basically hedge all our trades because these four right here move the exact opposite of these right here. So what I want to do is while we're taking buys, I want to take sales at the same time on pairs that have to go down. Therefore, we're not taking any losses in drawdown. Does that make sense? So if we know that GU, I'm talking about for next month. So if we know that GU has to go higher, right? Let's say we know GU has to come up here. I'm talking about for next month. Then obviously it's not going to move in a straight line, right? So what I'm saying is, while it has to come up there, it may go down here, right? Then it may move up and then go down and all this kind of bullshit until we get to our area. What I'm saying is, I want to find the exact opposite of those pairs that move exact opposite, which is these here, and I want to find a pair here that has to go down, right? Let's say we see looking at all of these that CAD JPY has to go down. So while we're taking a buy here to take to this area, we're going to take a sell down to this area for CAD JPY. Now obviously it's not going to move in a straight line, right? So while we're taking a buy here for GU, because we looked at all the pairs, I'm talking about for next month, and we see that it has to go up, we're going to take a sell at the same time or a day or two later, or really at the same time on CAD JPY or USD Chef for one of these, right? And as price is moving up and going down and then going up and look like we're wrong and then pushes all the way down until it hits our target. What I'm saying is, if we hedge these trades like this, then our account won't be in. If we're in drawdown, then our account won't experience any negativity. Is what I'm trying to tell you, because we're hedging the trade, right? So this is something that I'm introducing to our team as well, because before we just was trying to do the sister trading and just holding out through these drawdowns. But now I'm telling you, it makes sense if you rewind the video and watch it. If we know that GU or EU has to go up here because NU and GPB CAD told us that it had to come up here, then if we also do the same research and we see that USD DKK and USD SEC and USD SUD, they all hit a certain area already, right? And we know that they all move similar. So let's say CAD JPY and USD Chef is behind. So what I'm trying to tell you is that if we go short at the same time we go long, then our account won't be. We will experience drawdown, but we won't see the drawdown. So our account, let's say if we go long and short at the same time, and then the spread difference is like, let's just say $40. Then the prices are moving down and moving up till we get to our targets. The drawdown may actually be like $300, but it won't show. It's only still going to show, $40 difference because we're hedging the trade. Because every time price is moving up here, is moving down here, so we're hedging it. So we're not actually experiencing the hundreds of dollars in drawdown, only that $40 drawdown, while we went long GU and short CAD JPY. So that's the intention for next month. All right, so I'm about to end the video. Uh, Thanks for watching.